we start with the market that just can't seem to hold on to a rally. The Dow surging more than 450 points at the highs of the day. A trade deal may be seemingly within reach, but stop us if you heard this one before. Stocks cutting those gains midday and then selling off pretty hard into the close. We did end higher, but 300 points less than we were at the top. So, Guy Adami,
yes, sir.
Is this why this market is like a high school prom, right? I mean, it's
my problem was like this, Brian. I can tell you that. My problem was very different, by the way.
You just can't hold on.
FYI.
Right. There's no long-termism in this market at all. It can hold on to a rally. Maybe I should have said something.
I don't know what.
Move on.
Interesting metaphor.
Now I'm on camera. All those things are being said. I mean, it's guilt by association now. By the way, I had a pair of Joseph A. Bank boxer shorts in college, and for the longest time, I thought I had somebody's under. I thought that was an actual person.
Just stop.
Why can't this market hold a rally?
You know, we talked about this last night. I think in October something changed. You know, for 9 years it was any sell-off you buy and you were rewarded. I think something changed in October. And there are a number of different things that changed. Obviously, the most obvious one is the central banks. But I think it's more than that. I think Europe is slowing. I think a lot of companies here in the United States are slowing down, probably for all the right reasons. I mean, we're at the end of a cycle, a very long cycle. So I think now, instead of buy the dips, it's become sell the rallies. And I'll say this as well. Today, the market should have held on to the gains off all that China news. I understand something came out about President Trump, but the fact that it gave up almost 300 Dow points today leads me to believe the pain trade continues to be to the downside.
But again, you know, Pete Najarian, we talked about it yesterday extensively.
Yeah.
The political headlines. It's not a political show or a political network, but the political headlines do seem to be having an impact on equities.
And we absolutely are trading off all of those key words. And by the way, this gets misinterpreted all the time. When we talk about algos pushing things down, they push them up just as much. I mean, absolutely, they are a huge
We
factor.
hate them on the way down, and we never mention them on the way up.
Like them. So I'm going to mention them now. And I'm going to say that big move this morning, that was off of sort of recycled news of what's going on in the China world and everything else. And then suddenly the reality starts to slap everybody in the face about, oh, okay, we still have things going on in the White House. We still have Powell. We still have all these various issues that we've got to deal with each and every day. And then when you look at where the volatility remains, right there in that 21 spot. Now, yesterday, we were talking with Tobias Lekovich about volatility. He had a paper out about 3 or 4 years ago about 20 to 25 is almost an uninvestable area in terms of volatility in the market. And that's because it's so difficult right now, Brian, because we are getting incredible movements in the marketplace, but look at where we end up each and every day. The ups, downs, everything else.
But Tobias also says there's a 90% chance the S&P 500 is higher a year from now than today.
A year from now, yes.
Well, so one of the things that would tie both of those two views together is that 21 is probably the long-term average on the VIX when you remove central banks. Central banks are no longer your friend. They're not necessarily going to be a predator. We think the Fed is probably less predatory than it was 2 months ago. But get back to China. I agree with Pete on the recycled news. And just the fact of the matter is maybe there's some concessions on auto tariffs and a sense that the Chinese are going to work on the tariff side. The biggest issues with China, Brian, are clearly non-tariff related issues. It's intellectual property. It's state subsidies. And when China starts to mess around with that stuff, they're messing around with their own industrial policy, which they will not.
But BK, bring it back to the. Hold on. Good points. Bring it back to the subject at hand. Why can't the market hold a rally?
Uncertainty.
Uncertainty of what?
Of everything. Uncertainty around politics. We had that news today. Let's not forget the uncertainty around politics in Britain. Theresa May barely survived a no confidence vote.
What does that have to do with the Dow?
It moves the Dow. That's what it has to do with the Dow. I don't need to know why it does.
Wasn't that positive?
She barely won, though. That's the problem.
The margin of victory wasn't big enough.
I thought she was going to fail 2 days ago.
Yeah, but the margin error.
I just don't understand why the British Prime Minister matters for the Dow Jones Industrial Average. No offense to England.
It may or may not, but it does move the Dow. That's my point, right? All these things are adding up. You pick what you want your choice to be, whether it's the English Prime Minister, whether it's interest rates, whether it's China. All of those things have shifted the narrative. And to Guy's point, when things rally now, you sell it because you don't know what's going to happen. I don't know what's going to happen with trade. I don't know what's going to happen with the political situation here in the U.S. I don't know what's going to happen in the economy. Maybe it's slowing. Let me take some off the table.
The move from $72 to $50 in crude oil, although we could say it's a great thing for the consumer, there's something troubling about that. And I don't know the reasons why. Supply thing, maybe it doesn't really matter. Brian knows because that's your ballywick.
It is his ballywick.
Brian,
But again, I mean, there are things happening now that, if you want to just acknowledge, markets go up, markets go down.
Yeah.
And we're in an environment now where bad news is actually bad news.
And I like that. I don't want to certainly bring it back to my ballywick, as you say, but oil. But here's the thing. If we did not have that OPEC cut of 1.2 million barrels, oil would probably be in the low 40s right now. You got to remember, as Mike Kelly told us on set last night, break even for a lot of these debt-heavy Permian companies, not the old big line ones, but the newer ones, is probably $45 to $55 a barrel. There's $200 billion in debt outstanding in the space, Guy. Hold on. Oil is not an oil story. It's a debt story, and that's why the market cares.
But again, Tim it's not just a debt story in the energy space. It's a global debt story now that people are waking up to. Right now, corporate debt to GDP, I think, is almost 50%. Consumer debt to GDP is north of 50%. Nobody's cared, and maybe it doesn't make a big deal. But when people start caring is when markets start having to sell the rally.
And we do care, and I think it's great that what's largely an equity show, we're spending time talking about credit because, frankly, the bond market is smarter. The U.S. leveraged loan index is back at October 2016 levels. High yield is at 2.5-year lows. Yes, there's a lot of debt in the high yield market. It's heavy energy. If I talk to my buddies who are energy traders in the high yield market, they're going to tell you that actually they're seeing very little liquidity in these markets right now. I would get back to the companies, and this is really what's going to take us back to a better place for the market. We need to hear data out of companies that is more optimistic, both in terms of the macro environment. Bottom line is, look at Staples, look at a bunch of these companies. They're getting squeezed on both sides. I'm seeing a lot of data points that say margins are awful right now in the retail world, especially in Staples, especially in distribution. I'm hearing arguments we're at 20-year lows in terms of the margins for
Brian, I got a real quick one for you, though. If we're talking about a trading show, then it's very difficult, and you've got to be extremely nimble. If you're going 1 year out, because you called me on this Tobias thing, if I go 1 year out, I see all kinds of opportunities out there. Yesterday, I was talking about Home Depot. You buy Home Depot. I still think you can buy stocks like Microsoft. Apple, I added to just the other day. I think there are names that have been punished. It doesn't mean it's the bottom.
Okay.
And none of us are trying to
I love what you're doing. I love what you're doing. Let's do this. Let's do this. Let's flip it.
Restaurant, by the way.
That's fantastic.
It's no cap and D's. Let's flip it. Let's flip it. Okay, we talk about why can't the market hold a rally. How about this? So much negative stuff out there, right? Whether it's China trade fight, Brexit, potentially slowing economy, inverted yield curve, well, all these things. Isn't that when every book says you're supposed to start buying?
Yes.
When the point of maximum pessimism.
I don't know if
we're not there.
But we've reached maximum uncertainty, not maximum
So when do we know we're there,
pessimism,
Tim?
Well, I'll tell you what, again, we get a lot of different readings for the market over there. One of them is the institutional investors, the II Bull Bear Survey. By the way, we're around 45 in the Bull Bear Survey, which is lower than it was, which is higher than it was 2 weeks ago, but it's nowhere near telling you that people are beyond exhausted here. I think the retail community is actually still in a buy the dip mentality. I talk to RIAs all day, and a lot of these guys actually believe they should be in here nibbling.
Registered investment advisor.
When in fact, maybe this is an environment where actually you will materially take a step down in terms of credit and some of the other things we talk about. I don't think the market is that concerned yet.
If we were at maximum pessimism, news like we saw this morning would not rally the market, right? The market's optimistic that one of these things might change.
Yeah.
When we're at maximum pessimism, we'll get a news story that is actual real news, and the market will go down. Then you know you're at maximum pessimism. Not today, it's maximum uncertainty.
Although what you're saying is that people are actually buying and or selling. When the fact might be that the algos are buying and selling.
Companies. What
Which
about hold on?
Which changes what's really happening. It's not fundamental, is what I'm saying.
We still have one big bull case. I'm not trying to make a bullish argument, but if I had to make the bullish argument, how about this? There's still hundreds of billions of dollars in corporate tax money that is being re-offshored or onshored that has not been put to work. What about the buyback
I've got
side of the
Okay. I think that's a great point, but except for the data over the last 3 months is actually the repatriation data has been falling dramatically. Buybacks are really down enormously in the last 3 months, and that was a major underpinning of this market. So I think with the exception of companies like Apple, who we'll talk about later in the show, I think can continue to do that. I don't think every company is really in a position, and in fact, I don't think they put it into CapEx. They put it into buybacks that will not go on forever.
You're an optimistic guy.
I'm always optimistic.
Give us, if you had to make one, I'll give you one answer to make the bullish case for the equity market right now. It is what?
Mueller investigation goes nowhere. China skirmish gets resolved sometimes in early January. and then the market takes off from there.
That's 3, not 1. You went to
Well,
Georgetown, not an
early
engineering
January is
school. Clearly not a
extremely
math-oriented
optimistic, by the way.
institution.
Well, you just asked me an optimistic thing.
I said one
How about winning
thing.
the lottery
30
too,
days,
guy?
that's a
What else you
huge
want to
one,
do?
man.
You want to win the lottery too?
It's tango and cash night, right? That's what we're doing, or
Turner and Hooch.
You know, you're not going to let me live that down, are you?
But the long rest of your life.
Thank God your bark is worse than your bite.